Welcome everyone to office hours for TradersPost on this illustrious August 30th of 2024. The kids are off to school, and as adults, we have our lives back. I'm so very happy. I'm Tom Hartman, part of the marketing team here at TradersPost, along with CSO Mike Christensen and CEO John Wage. How are you guys doing?
Doing well. Also looking forward to forgetting I even have kids. So that's fantastic. This is a good new season to run into.
That's right. It's like, oh, you need extracurricular activities? No problem. Like, sign up, stay after school. I'll come get you at 11 o'clock at night.
Exactly.
Perfect. Well, it's been along with the end of summer and the return to school. It's been somewhat of a little bit slow week for questions, but also chalking that up to a bunch of people are answering people's questions in the Discord group, and we're getting a lot of quick replies to people in the support tickets. And also, John has been rolling out all kinds of great updates to the platform that just helps people answer questions beforehand. So I sort of have mixed feelings with that because we're gonna run out of questions if John keeps making the platform better. So let's slow him down a bit. Let's send him on vacation for a couple of years and and keep office hours going.
Otherwise, there's nothing to talk about here every Friday. If the software just works perfectly, then you and I show up and we're like, so Traders Post. Yeah, it does things. Does anybody have any questions? No questions.
All right. Well, I do have one pressing question that keeps coming up week by week, but I'll ask it this time, and that is, where can I buy Trader's Post hoodie? This is sent in by a handsome Tom Hartman, who wants to know. So I know you guys have Trader's Post swag. Is there any place to get them?
They're coming. Yeah. Tom and I have been tasked with coming up with the best swag ideas we can. So far, we definitely need a mug. We definitely need a water bottle, like a good water bottle, a hoodie, a beanie, and like just in true Silicon Valley fashion, a Patagonia vest. Like we've got to have one of those. That fits right in with everybody else. So we're working on some ideas there. But if anybody wants swag, please leave some comments or comment here on YouTube or hit us up at support@traderspost.io. We're looking for ideas on what kind of swag you would want. And the prizes for free go to those who are using the platform the most. I'm looking for the power users. I'm just going to reach out to you and just send some stuff your way.
Perfect. All right, so I want to start off with a real question here from someone. This question comes up all the time. So in TradingView, how do I send an alert right before the session closes to flatten my position? So I have a new script that I want to publish on the Traders Post library, which is just handles this. It sends an alert. Um, uh, I'll show you over here. It's just an alert that gets sent at the beginning of the session if you wanted to, or at the end of the session.
Nice.
And the idea here is that in the script settings, you'll be able to set the session you're dealing with and the time zone. And if you want to, so if you just had this, what it'll do is that there's a new parameter on the time function or the time method in PineScript that allows you to look forward up to 500 bars into the future. So now we can actually check if the next bar coming up is in the current session or will be in the current session, and be able to determine an end that way. But if you didn't want to rely only on that, because what I like to do is that I don't only want to know what the last bar in the session is. I want to know where I am in that bar. So maybe I want to be on the 15. I'm on the 15-minute chart, and I want to end on the. But I don't want to close the positions at 3:45. Maybe I want to close it a little bit further into the candle. And so if we enable granular control, we'll have this counter that shows up next to the last candle. And we can set here, let's say, change this to seconds. We'll be able to set, I don't know if you can see that there next to there, but we'll be able to set how many seconds in or how many of the sub time frame bars. And at that number, the alert will fire. So if I'm on the 1 minute chart and I set this to 1 second, it's counting every seconds. And I could say at 30 seconds on that last session bar, send the signal to close. If I was on the 15-minute chart, I can decide to say, give me the 1 minute sub time frame, and when I am 10 minutes into that candle, go ahead and send the alert. So I wanted to have, I'm going to publish this inside of the, with you guys' permission, into the TradersPost library publicly. But I also want people to use that as an example of how they can go in and actually use their own code if they want to add it to their own strategies, how to time the end of a session.
Yeah, I like this a lot. I think maybe one comment I could make about this is I've had a lot of people who are moving to daily strategies, which of course I love to see. It's really tough to trade on intraday, but the farther you get away from that noise, I think the more successful you are in terms of, dealing with the, let's call it the sleep test, right? Like the litmus test for whether you can sleep at night. My opinion on strategies in general is if you can't walk away from your screen for more than 5 minutes, then you're probably taking on too much risk. So daily strategies look pretty nice. But my question is, if I'm on a daily strategy, how will this trigger? And I think it's important to recognize that you can create alerts on the daily chart to take your positions, but then could use a script like Tom's here, but change to the 5 minute time frame or the 1 minute time frame to create that alert, but then go back to the daily time frame to do your analysis. So that means that the alert will fire off of the 1 minute chart, but your strategy runs on the daily chart. So there's no reason you can't switch on different time frames there.
So I can modify that so that the session is optional because that's only intraday, and then but the granular control will still work. You can just say you could subdivide that daily into whatever time frame that you want, and then set it up that way. But I would imagine the way I had a client work on it is that they had their strategy working on a higher time frame, but then they set alerts on a separate chart at the lower time frame specifically just to send something like this. So there could be different ways, but I will modify it. I actually didn't think about the daily time frame or up.
Cool.
And that way, I'll post that inside of the Discord group for everyone to get, and that way we'll never have that question again. We could be like, "This is how you can do it."
Well, maybe not never, but we'll hear it again, and we invite it. We'll point you to this new script.
All right. So next up here, so someone was asking a general question: if automated options trading is popular with TradersPost users. What do you guys say about that?
I mean, maybe not from a notional perspective. We have found that more and more users are driving more volume through futures contracts than anything else right now. Crypto is a good percentage, fairly small, overall. Most of it is equities. A lot of it is futures. And then we do have a good percentage allocated to options trading. So there are some people out there that are sending a lot of signals through options. They've got some creative rules around how they're selecting contracts. I would say it's not necessarily popular from like a notional perspective in terms of where all the volume is going, but people are actively using it every day. I don't know how to define popular, but it is a very useful tool.
It's funny, in my world, people are using options. I mean, not at all for like protecting themselves. Like the retail traders I deal with, they're not doing it to protect themselves. They're all YOLO.
It's lottery tickets. Yeah, a lot of it's lottery tickets. And we can see that just because of how many people trade 0 DTE contracts. But for those that are using it for, let's say, hedging or put protection, we're seeing some of that as well.
Excellent. John, do you do any options trading?
Not really. I used to, but I more and more have just preferred futures. It's simpler. You can get the leverage without the complexity of adding the additional time variable. There's a lot more moving pieces with options.
When you're coding options features within the TradersPost platform, do you think to yourself, hey, maybe let me just put on a couple of positions and see what this like all the way through? Do you ever get the bug, or do you just test it on paper?
No, I don't. I do think, though, that Mike and I have been talking a lot about adding more capabilities of TradersPost to support multi-leg options orders,
right.
And I think that will be helpful. But then additionally, we want to add more functionality that supports more traditional investment strategies. kind of combine that with technical analysis and automated rebalancing, and maybe use some of those more advanced order types for options to do automated hedging and things like that. And I think that will be really, really useful.
Excellent.
Yeah, I totally agree there.
We have a question here in the chat from Adventure Trader, who is asking, how come when I trade micros on TradersPost paper trading, the position sizes are huge? Is this something that I think we saw last week, where if you're not sending in the position size when you're using TradeView, then it doesn't calculate it properly, like on the paper trading account?
I remember you guys talking about that last time, but the issue, I'm not sure what Aventura Trader is referring to, but the main issue with the TradersPost paper broker and futures is that we don't have live market data by default. So if you if you open up a position and you enter at a limit price that gets filled, which with the TradersPost paper broker, it just fills at that limit price instantly. And we try to fetch a quote from the broker, and because we can't fetch a quote, the price is zero. So it looks like the position has gone down 100% in value. So you have to connect another broker to the TradersPost paper broker that has futures market data, and then our TradersPost paper broker will use that broker connection to fetch quotes. So you can connect. TradeStation is really the only one we have right now that has futures market data. But I'm not, when he says position sizes are huge, I'm not sure.
Yeah, he lost me on that one too. And he's saying micros, so I assume he means the micro E minis, which should be 1/10 or 1/10 the size of the E minis. Maybe you can expand on that. Oh no, I guess we helped him out there. It's the price and basically seeing the P&L being crazy.
Yeah, and I hope that, like, honestly, like, I want to add futures market data into the system, but the CME, and they make it so difficult. Like, I just want someone that will take my money. Like, they don't have a product to sell me. It's unfortunate. I feel like there's a missed opportunity there for them. Polygon is one of our market data providers that we use right now, but they only have stocks, options, and currencies, crypto. But
on that subject, though, John, I guess outside of office hours here, I'll catch up with you on the price quotes I've gotten from Quode, which is another vendor in the futures market data space. I think we can solve this problem, but we just need to negotiate some pricing.
Cool. Yeah, it'd be nice if we can have that. Then we'd have live market data for futures in our paper broker out of the box, which I think would obviously be pretty helpful. But cool. Reduce questions is something that everyone runs into, and we tried to add warnings and notifications in the app and try to guide people so that they know they need to connect that TradersPost paper broker, but there's always more work to do there on the user experience.
Yep.
I wonder what you guys, not to put you on the spot, but what do you envision the paper trading account for the TradersPost paper trading account to turn into? Do you want it to specifically rely on the paper trading services accounts from brokers, or do you want to develop it into something bigger or better?
Well, I can tell you kind of the history of it. I built the TradersPost paper broker originally so that we could run automated tests for the TradersPost system. This is like a development thing so that we can make sure that our functionality is stable whenever we're making changes, and we can't run test strategies against all of the live brokers. So I built that paper broker so that we could use it to run our automated tests for quality assurance. But then once I built it, I was like, hey, some third-party brokers don't have paper brokers, so maybe I can just make it a feature, and then people can paper trade in TradersPost without having to even connect a broker. So I think that's been really useful. It's kind of it's the first broker that people use when they're kind of just like getting started with TradersPost. The downside is it's not as feature rich, or it doesn't have all the features that a real broker has.
No commission, no slippage model.
Yeah, there's no like we need to enhance it. So I think that long term we definitely need to do some work there to enhance it. Like right now, when you use limit orders, if you send a price, like you just get filled at that limit price no matter what. So it's kind of more like how a back testing engine works, where it's like this is the price you get filled at, and it's just the way it works. But I want to improve that so that we have like a more real filling mechanism that's based off of the live quotes. The ability to have limit orders that actually fill correctly, canceling orders. So yeah, I think over the long term we want to enhance it. It's just a matter of where it falls in the priorities. And unfortunately, it kind of falls to the bottom of the list a lot.
Cool. All right. Well, along the same lines, then, someone was asking, will TradersPost allow Forex trading in the future? Especially since crypto is there. Some of those people really cross over. They like both the currency pairs for Forex and for the crypto space. Is that on the roadmap?
I think, yeah. I mean, it's when I set out to build TradersPost, I kind of had all the asset classes listed on the website from day one, even though I only had stocks. So, my long-term plan was to always have all of the asset classes, and then Forex is the last one. So to kind of complete that mission, I think we kind of have to do it. That's like my personal desire to just like finish what I started. But I think from a customer perspective, we're definitely getting. Mike actually pinged me yesterday about more and more people asking for Forex. And we do have some Forex brokers on our wait list, and I think Forex.com is the top one.
Probably Tasty FX as well.
Yeah. So I think it's just a matter of when. Maybe beginning of next year, end of this year, maybe we could start some work on it.
I think so. Yeah, I know it's been sort of the one untouched thing, and we've had Cam on a nice extended vacation for the last 10 days. He's back today, but I took over support for him while he was gone, and I think I had like 4 emails asking about Forex that whole time. So we know the demand is there. We are working to prioritize it.
Yeah, and correct me if I'm wrong, but I think Forex is more popular outside of the U.S.
Mm-hmm.
Right. It's less regulated. People use Forex for copy trading because it's less regulated and there are less rules. So
I think leverage.
And it's leverage. And I think that's why people are attracted to it. So
right.
For a platform like TradersPost that does have the capabilities to execute trades across multiple brokerage accounts, Forex would be a perfect asset class.
Mm-hmm.
I remember when I started trading, I've traded every asset class except Forex, because when I started, that was the first thing that I saw on YouTube and all the different things. And I knew that I didn't even know where money came from or what money was. So I go, how about I just go to stocks? Because I don't even understand what this pair is even talking about.
It's funny. My old boss, he has a big office in Mexico, and he would buy a bunch of pesos and like kind of play the spread between the currencies. And it's crazy, man. He would like get huge discounts on his payroll because he's paying payroll down in the peso, and he would like buy pesos ahead of time. And just funny how like he's a Forex trader without like being a Forex trader, kind of.
Yeah. FX, I mean, there's entire divisions for that at larger global companies where they're managing the Forex exchange and how that shows up on the books as well. That's definitely a game that global corporations have to constantly play. So
it's in Canada where I am, if for companies and for individuals, if you can hold some of your cash, you get paid in some of your cash in US dollars, and then you save that, because they're always doing these crazy things with the Canadian dollar. You're almost like happy when when something goes, when the Canadian dollar tanks, because you're like, great, I'm getting an extra 10% off my US dollars, and you just convert that over and you get a nice little bonus.
Yep.
So we're a little.
Do you hold USD in like a traditional bank, or how do you hold USD?
Both. I hold USD and USDT. I hold as much US currency as I need. I only convert to Canadian when I need to buy something.
But like, do you hold it in like traditional Canadian banks, or where do you hold it? The USD?
Yeah, so I have a bank account in my Canadian bank that holds American dollars, and then also keep it in PayPal, and then also in crypto.
Because like that's
Yeah.
not. I don't think that's a thing in the U.S. Like I can't hold other currencies in my bank. It's
No, because there's no more powerful currency than the one we have. So we're not used to that concept.
Yeah.
But other countries are like, you guys aren't playing the Forex game? No, we don't
right.
even understand the Forex game here in America.
Yeah, I had a friend here visiting from Germany last week, and that was something we talked about. You know how like he gets paid in USD, but he lives in Germany, and they, you know, there were several jokes about that like didn't land for me because I was like, that's just not a thing I think about. But apparently, it came up like several times, and I was like, oh, okay, I get it.
Very rarely I'll have a client try to be sly with me and pay me in Canadian dollars. I'd be like, excuse me, we said this is the amount we agreed upon in US dollars, but you're in Canada. In US dollars, thank you very much. All right. Okay, so next up, so this is more of a inside baseball question, but someone was asking, how important is it that the exchange I'm displaying on TradingView match the exchange at my broker? They were worried that, or the question was, how different can the prices really be between assets on different exchanges? From my own personal experience, I've seen that, especially since I trade crypto so much, you can definitely get swings on crypto futures that are drastically different than the index, depending on what's going on with that platform. But have you guys any feedback on equities or bonds?
Yeah, I can take this, John, if you want. So it depends on the asset class. If we're talking about equities, then you're already under a regulated environment. The broker that you work with is required to give you what is called NBBO, which is the national, or the, sorry, what's the stupid acronym? National Best Bid and Offer, excuse me. So for the most part, the broker should be giving you a good consolidated price across multiple exchanges so that you get executed at the best bid and offer possible. That said, TradingView's data might only be coming from one exchange. So it could be off by a couple of pennies sometimes. It just depends on what kind of stock ticker we're talking about. If it's OTC, it's anyone's guess. If it's like a little pink slip stock, it could be crazy. But if it's a large ticker, a large symbol, one of the Mag 7 or something like that, which for the most part, that's the vast majority of what people trade on our platform, or a lot of the large names, it should be extremely close to what you would expect from the broker, even if that's a consolidated price. It gets a little bit different in futures. There are a couple of different data providers in that space. And then it's also a little different in options. Crypto, of course, is a completely different question, where the exchange that we're referring to could have a fairly large delta between the Bitcoin prices on two different exchanges. So I guess it really depends. How to deal with it is another problem, because it just depends on the data provider that you are paying for on TradingView for that particular asset class. And what you'll want to do is choose a broker that potentially uses the same data provider for their platform that TradingView uses. But again, I think it really depends on the asset class and the ticker that you're trading. If you trade something that's, you know, has big spreads on it, then yeah, you're likely going to see some variance there in the execution price.
And correct me if I'm wrong, but with crypto on TradingView, they have multiple data sources for like Bitcoin. Like if you're trading on Binance, you can see the Binance Bitcoin chart on TradingView, and you can make sure that they're lined up.
That's right.
But with equities, like, do they even have? I guess they do. Yeah, they would have the different exchanges. You would just find them the same way.
Yeah, that's largely done with your subscription with them. So the data for stocks is coming from whatever subscription you're paying for equities. So you pay for NYSE data, you pay for NASDAQ data.
I see. Okay. Got it. So I think generally, yeah, if you can match them up to be exact, it's better than if you don't.
Yeah.
Perfect. Well, along the same lines, this is something that's come up for me personally recently. And the question is, would using the new tick chart option on TradingView professional plans help to prevent repainting in my strategies? I don't know if you guys have had a chance to test out the tick chart data on TradingView. Have you got your hands into it?
I played with it a little bit, but this doesn't really change the nature of repainting at all. The repainting occurs on the strategy rules themselves. It's not necessarily how the data comes in. The tick chart data is essentially the same thing as temporal data, where as time comes in, we're rolling up all the ticks that occurred within that particular block of time and then giving you the open, high, low, and close. It's the same thing on a tick chart, but the difference is you're locked into a certain number of ticks. The repainting occurs based on the rules of the strategy, depending on how it looks back at data or refreshes the look back history. Things like what's the like zigzags, indicators like zigzags are a good example of this, or even Heikin-Ashi charts, which constantly refresh based off of current data. So I don't think changing the format of the chart is going to change the nature of how repainting works. Tom, do you hear that as well?
Well, what I'm wondering, and this is what I just started testing, like literally, it's been like a day since I got my hands into it, and the idea I'm trying to tackle here is that I want the back testing to more accurately reflect what actually happened at the time.
Mm-hmm.
And the because on the back testing, the candles are just a snapshot of what happened. So maybe there might be 2-3 snapshots in a particular candle. I'm not getting how the price actually flowed in that candle, how something might have triggered if I'm not waiting for the bar to close. And so my idea here is to modify a strategy script to run it on a tick chart, but pull information from a higher time frame and see if the backtest in there actually matches up with the signals that were actually sent. Because I'll have situations sometimes where, often we get messages like that, even where an alert will fire, but nothing shows up on the chart for that candle. And so I want to get those, since I have logs of those alerts, I want to see, do those alerts now show up on the tick chart? And I suspect that they will, because I'm getting all the data. The limitation is that if I'm on the one tick chart, I have to there's a limit of how far I can go back, and they don't have tick chart data for every chart. And so I've been running it on an asset on an exchange that they don't have the tick chart for, tick data for. So I'm going to test it on whatever Binance and see how it works there. But the big complaint that I saw in Reddit and on Twitter was that people were saying, well, if you had tick chart data, this would solve the problem, because you're just simulating what happened on a candle. But if we actually had what happened on the candle, then that might fix it. But we'll see.
But the candles still close even with the tick chart data, and depending on the nature of your indicator, I'm thinking of things like like an Elliott wave indicator or something like that. This still has to wait for a certain number of bars to occur before it goes back and refreshes where the low was in the historical data. So like the easiest way to tell if an indicator or strategy is repainting is to use the bar replay tool. If the indicator fires at one point in the replay process, but then the signal disappears, that's how you know it's repainting. And I still think that would occur even on tick charts. It's not the availability of data that makes a difference. It's just the way the strategy or indicator works.
But we wouldn't then see that marker of that of the alert or whatever the trade that happened on the tick chart. I know on the normal one it would disappear, but on the tick chart then it should still stay. No.
Well, that's what I'm saying. It depends on the nature of the logic of the strategy or indicator.
Yes.
Right. Yeah. That's why I'm saying my argument is saying it's not really based on whether it's a tick chart or a temporal chart. It's still the indicator itself that causes repainting.
That's right. Okay. We'll see. I'm enjoying it. I'm enjoying the idea of the tick chart, because it's I guess I never really understood how different the tick chart behaves, like how it looks and how it feels and what kind of trades you might do versus the temporal charts. But it's been pretty interesting. Like I said, I've been diving dipping my toe into the prop firm trading thing.
Yeah.
And you'll be happy to know that I haven't blown out my account, because
all right,
I'm paying very close attention, and it's why lose the account when I don't have to? I could just be crazy in my other accounts. I don't need to do it over there in prop firm.
It's interesting that you're saying that, because that was kind of my main lesson from joining the Quantopian competitions. It forced me to think more about risk. It forced me to think more about the performance of my strategy in a way that was beneficial to my performance. So I think you're echoing some of the same findings that I had there.
That's right. All right. So, second to the last question, someone was asking, how can someone get listed as a PineScript developer on TradersPost? Do we have a series of guidelines for that, or?
Yeah, there's a $20,000 entry fee to be. No, I'm kidding. Please just reach out on support@traderspost.io. We're happy to kind of give your profile a look. I think one small ask we have is that if you're on Fiverr or Upwork, just mentioning that you do integrations for TradersPost is a huge leg up for us, because what happens is people will search for TradersPost on Fiverr or Upwork, and they need to find people that can actually do that kind of work. So being able to mention, or just mentioning that you do integrations on TradersPost, is super helpful for us.
How do we feel about people soliciting work on the PineScript channel and Discord? Doesn't happen a whole lot, but people do it for free. They'll help each other out. But if people were going in there and specifically asking, "Hey, these are my services, these are my fees," would be okay with that?
Just try not to be too spammy. Like if you start annoying people, just like note read the audience,
Read the room, right?
read the room.
That would be the only thing that I would say, is that if we allow too many people to do it, then it's just kind of the same as people trying to sell their services.
Yeah, now it's become Craigslist. Yeah.
Yeah. So.
Well, what people do now, if they like the interaction, they'll just say, "Okay, DM me," and then they have the conversation off, which is.
I think that's the more like good way to do it, is like participate in the community and like build a reputation. Like, don't just like blast in the door and the first thing you say is like, buy my stuff. It's like, you got to give a little bit first before you take.
That's right.
Peter says it will definitely become spammy. Okay, never mind. No, you can't promote your services on Discord.
I have. There's been a couple people that just hop in, and then the first thing they do is try to like sell, right, like a trading community or a competitor of ours, and I've definitely had to ban a few people for doing that.
Yeah.
And better be a good developer. It's just like, I mean, that goes without saying, but maybe have a couple of scripts to show. Number of people, it's like, I'm a PineScript developer. Let me show me a script you've done. Zero scripts you've done. Okay, great.
I did the Bollinger Band indicator. That's what I
did. Speaking of which, it turns out you cannot publish a Tom DeMark indicator on TradingView because it's trademarked if you try to post it. Right. And I was like, why do they keep taking on my thing? Oh, no, you can't do that. All right.
You just have to misspell it in some way. Just be like demarque and like add a QUE at the end.
All right, so I'm going to finish up here with a question. I actually want to take this clip, the next clip, and post it into the Discord group. And specifically, I want to be asking, what kind of content would you be interested in TradersPost covering as it relates to automated trading? We're really happy to see some of the feedback we've been getting from people, but there's things that Mike is interested in, I'm interested in, John's interested in, and we want to know where that Venn diagram matches up with you guys. So we really want to be the best automated trading platform for you guys. And in order to do that, what we see in our minds is, hey, we want to get people who are professionals in the industry or successful retail traders and get them on in order to interview them and ask them questions. Maybe do more how-to tutorials on for PineScript, or provide tools and resources that might be helpful for you. But as far as discussions are concerned, if there's anything that you want us to see, that you'd like us to see on this platform, we're all ears, and we'd be happy to reach out to anybody that that you think might be a good fit as an interviewee. All right, so we'll leave it there. I'm actually so that'll be it for office hours. But as we're doing now every week, we're going to roll right into after hours in order to a little bit more freeform, loose conversation about the markets. John, are you staying for this? Are we chaining you back on the computer to get back to the, the development?
I'll let you guys talk all the fancy after hours stuff.
No problem.
Always good having you here, John.
All right. See you guys.
All right. See ya. Dun, 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 dun. This is where we have to insert like a splash screen. working on the music and the graphics for the switch to office hours.
For half a second, I thought you were going to do the NFL theme song. Dun-dun-dun, 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 dun-dun-dun. Oh,
I've
shit.
the only sports ball I watch is like video game sports. If it's not a video game, I'm not paying attention.
Understood.
Speaking of which, I'll just start off with this. Have you? I've started making all my own music now using AI for music generation. Have you dabbled in that at all?
I keep seeing this ad for this app that will like let you sing terribly and then use AI to make your voice sound amazing. It's like different than auto-tune, right? Like it's using your voice as an input and then training the model to actually sing correctly. And I'm like, well, that's cool because I can't sing worth a damn. Maybe at one point I used to, but I am totally tone deaf now. So I want to try that out and see how that sounds. Maybe write a song for family members or whatever. But no, I haven't done any of the music generation stuff. That sounds pretty fun.
Oh, just beautiful. Because if there's anything I hate about listening to the radio is when I hear lyrics and I go, those could be better. And now I can make it better. That's great. Okay, so the question on everyone's mind, and by everyone, I mean me, Bitcoin is in the middle of a channel. Do we rise to 66K or do we fall to 53K? I'm on the fence on this. Let me just pull up the chart here. Because it all depends. For me, it all depends what's going on with the dollar. And the dollar is right at support. And so it could go either way. And it's a strong support. It's a strong long-term support. Let me just pull that up here. What's your short-term opinion on that?
It's not looking good, right? We've hit 1, 2, 3, 4, 5 resistance zones now that have all been reversals. And we're below a short-term moving average on the EMA. Global liquidity kind of hit a peak where I was expecting a continuation. I mean, it's definitely very promising there, but we've got this one support level that I was already expecting a bounce from, and it bounced off of perfectly. That was the 0618 retrace level. My chart has it at 49,372. I think the low that day was actually 49,217, went a little bit lower, but it wicked right on that 0618 line and started to bounce back up. That said, since then, we've had this slight reversal, which posted a lower high, and that's not very promising. So we've got a couple of local support levels that I would want to see either maintained, but if they break, I would start to get pretty concerned. I'm looking at the daily chart, and I think the local low right now that I'm interested in watching is the 15th of August. And that to me represents a potential support area where it could bounce from and maybe head to the upside, but we have failed some areas of resistance more than once now. It's trending downward. I'm not seeing a lot of support other than this indicator on M2 global liquidity showing us that the overall liquidity availability is rising, but we need a catalyst of some kind, something in crypto that says, hey, now's the time to get in. And I'm afraid that catalyst is likely going to be a bigger sell-off. That'll be a zone for accumulation.
That's right. So that's how I feel as well. We had this wick down to what is it? Is it my seasonal zone? I never remember the names of my levels. This one is the yearly average, and
Okay.
so we got down there. The thing is, we didn't get fully into it, and we never did any real consolidation, even a short-term consolidation around that level.
Mm-hmm.
And you could always tell the inertia of a move by, do you make a higher high? And we didn't make a higher high. That means, it's the ball falling down the stairs, and you're not going to get as much energy in order to blast off without an external catalyst. And if it's external catalyst, well, you can't do any TA on that. However, what's bothered me here is the US dollar. So the US dollar did break the seasonal support, which it had been holding for a while. But it also means that the dollar can come back up and retest this yellow area, and this much move back up in the dollar, even if it's a bounce to a lower high, is enough to bring equities and crypto down a notch.
Yep.
So that's what worries me. And until, if the dollar was over here, if the Dixie was up at 102, I'd feel much safer. But it's not, and it hit it hit this zone, this long-term zone over here that's been support now for a while, for years.
Yeah,
And
we've been
so
there. It's the 100 line, right?
yeah,
And we don't seem to be breaking below 100 for very long. That seems to be a long-term support zone. The last time I think we broke below it was July of 23, and it was only for half a second before we pushed back up into much stronger territory up to the 108, 107 zone. So I do see the same thing. I'm seeing very strong support for the dollar and a potential rise from here.
yeah. So what if we do get something more like what happened in 2020, where basically this is just a larger pattern of what happened over here, then at this level that we're at, we can bounce up a little bit, get that pullback, and then really launch through lower, which could coincide with the whole rate cuts from the Fed, for bonds. The issue is that I'm not sure if you're seeing anything like this, but I'm not seeing anything that shows that inflation should reaccelerate anytime in the next 6 months, or at least the data for the inflationary data is going to reaccelerate. So I do expect bonds to come down, especially as the Fed starts cutting rates. In fact, um, Jerome Powell, I don't know if you saw the recaps or saw the press conference that Powell did recently.
Mm-hmm.
I mean, I haven't heard him that dovish since 2018. I mean, since the Powell pivot, he basically said, "Okay, things are better. We have enough data. Now we're going to start being accommodative. Let's turn on the spigots," and that's usually a cue for things go bad inside of the financial economy.
Well,
Short term.
that's true. I'm hearing lots of calls for recession, or we're already in a recession. Some rule has triggered, blah, 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 blah. I guess it's still anyone's guess in my mind as to whether or not we're soft landing, hard landing, no landing. My opinion seems to wane and shift on that as well. However, even with this, recent pullback in the market, we kind of expected there would be a continuation there. And as usual, the markets like to step in and surprise us with their ability to reverse those trends rather quickly. Almost a complete retrace from the all-time high happened in equities. And in general, the one tool I look at in terms of interest rates and paying attention to the future is the Fed's CME FedWatch tool. And the next meeting is still showing, high probability of a rate reduction and a continuation well into November and December. So that tool has been pretty useful in understanding where sort of the direction of Fed interest rates are likely to go. What that tells us, though, and I guess to your point, is if there is a reduction in rates and we start pulling back, that's usually the signal of a recession as well. It's usually a bad sign. That said, I don't know, I'm kind of holding out hope for this idea that that could mean good news overall, especially with the expansion into the AI industry and the fact that unemployment is still extremely low. We're basically at full employment right now, and we're still seeing strong economic growth.
That's right. And if we take a look at, I think the NFCI, I think it's falling. Oh, wrong one. Yeah, so this is what I pay attention. This is my weather report. Yeah, and we're falling. So when the sky is falling, the credit conditions are improving, and so it's one of those sad things that it doesn't really matter if the individual citizen is struggling. What matters are our financial institutions struggling, and so far it looks like things are getting better, and they have been enthused by the idea of quantitative easing coming back on the table.
Mm-hmm.
So long-term bullish, short-term, who knows? Plus, we're smack dab in the middle of the Bitcoin channel, and you can't make any decision there.
True.
At all.
So Peter asks a good question here in the channel on the subject of Bitcoin here. Don't we need regulatory clarity for Bitcoin to the moon? I think the market is waiting for the election. The nice thing about Bitcoin is that I think we've already gotten the clarity on it. It's by all accounts not considered a security, where the question in mind for all other cryptos except for Bitcoin is this a security? And does this pass or fail the Howey test? what's been interesting to me is like kind of how the SEC has glossed over Bitcoin as being included in that category. And I think that's why I'm typically pretty bullish on Bitcoin relative to other cryptocurrencies, because it really does kind of just fit into its own category. That said, I don't know that it's regulatory clarity that's required for Bitcoin to moon from here. I think it's some of the other fundamentals that we've discussed. We just need another catalyst to push retail investors into the space.
Right. Well, I've noticed this thing where I had always used the U.S. dollar as a precursor for, or as a leading indicator for Bitcoin. Inverse correlation between them. And recently, I don't know if you found the same thing, I'm finding the other way around, that Bitcoin is a leading indicator for the dollar. So Bitcoin will come down and be like, hey, but the dollar is still, the Dixie is still falling. And then, the next day or the 2 days afterwards, the dollar has bounced. And if that's the case now, Bitcoin, if that stays long term, that would indicate that Bitcoin is becoming far more of a staple now within the global financial structure than I have any idea of. Yeah, I don't know if it's smaller players and institutional players, and they're the ones who are highly affected by global liquidity, and then they're expressing that first inside of the crypto space, and that's why we're seeing it before the dollar. But this bounce in the dollar that we just had in the last couple of days was presaged by the drop in Bitcoin. And I would not have expected that. I don't like that because it completely flips all my indicators and I have to like change them all. And what I want is to predict Bitcoin. I don't want to predict the dollar. I'm not a pairs trade. I don't trade the US dollar. I want to trade crypto, but I'm not sure what to do with that. So we'll see. Along the same lines of, well, actually, this is slightly different, but I want to touch on the Nvidia issue. Now, I don't trade Nvidia, but wait, first of all, is it Nvidia or Nvidia? Peter makes fun of me all the time. Nvidia. Okay.
Nvidia.
And there's this tweet that happened recently. Well, let's just take a look at the chart first of all. So we do have, the question is, has it topped?
Right.
Let me pull that up. Actually, let me pull up this tweet first. So this comes from Tier1 Alpha. And what they were saying is that a friendly reminder that non-discretionary funds will continue to buy Nvidia simply based on its size, regardless of its earnings or any other fundamental reasoning. For around 50% of the investable market, fundamentals just aren't part of the algorithm. So this is something we've been touching on for the last couple of weeks, this idea that it's not whether a thing should be investable or not. It's whether the passive flows are directed to that asset because of its location within index funds. And so if there's going to be passive flows that are going there because of people's 401ks or how this company is positioned within the SPY ETF or NASDAQ ETF or whatever it is, well, then they're going to get a percentage of that allocation. When a dollar goes into one of those assets, it's going to buy Nvidia no matter what. And so if that's the case, and Nvidia is not getting out of these indexes, then this is a buying opportunity, and we just have a temporary low, and we should rise higher from there. What's your thoughts on it?
So I'm very interested in sort of reevaluating Nvidia from a fundamentals perspective. If I could share a tool that I use quite a bit here on my screen, if you can help me get that up there. Yeah, perfect. So this is a tool called Simply Wall Street. It's basically a valuation tool that allows you to do sort of discounted cash flow analysis on companies, and it does a bunch of other fundamental analysis sort of built in. And I love the graphics of this platform, but the valuation tool is also very helpful. We can make the argument that Nvidia is overvalued from a fundamental perspective using a discounted cash flow model. But the problem with these estimates is that they are largely based on historical earnings growth rates that averaged around 49% per year on a rolling 5-year period. But this last earnings period, if we come over here to this chart, really tells us everything. This is the earnings history for this last quarter and obviously this last year. And I want to pay attention to specifically the earnings improvement here. It's over 700% in the last year. Now, I don't expect that Nvidia is going to maintain that kind of velocity over the long run, but I am expecting a big increase in overall earnings expectations going into the future. So maybe we change that. That it goes from like a 49% 5-year average in earnings growth to something like, you know, a 60 or 80% increase in earnings growth. So it's very difficult. Like whenever these DCF models are used, they tend to use a historical average of earnings growth and then project that into the future, take the discounted the risk-free rate and discount that against to the present time, right? And so that net present value is sort of based on what we think it's going to do in the future. I think the difficulty here is knowing what Nvidia's earnings growth is really going to be like in the coming future. And one thing I'm confident about is that Nvidia is one of the biggest benefactors to the AI industry, which is not as hypey as I think other industries have been in the past. This is I think we're seeing a fundamental shift into a new tool, a new type of tool that changes people's lives. We were just talking about it earlier here, using AI to play with music. That we're still in this early discovery phase where some people haven't even played with ChatGPT yet, haven't even thought about using it. And the moment that they discover how much utility it has, they're suddenly ready to throw their credit card in and say, yeah, charge me $20 a month. Every single one of those companies that's going to build software in the space still needs to benefit from the graphics cards that drive this. And the demand for NVIDIA graphics cards is unbelievably high. And we're seeing that start to reflect on their balance sheet. So I think that this recent earnings report is obviously indicative of that. They beat on earnings, beat on revenue. The future reports and future guidance are also looking promising. I think at this point, what's happening is investors are like shaking out this idea of, do we think that this can continue? Personally, I'm still very bullish on Nvidia. If there's any kind of retrace and any continued pullback in Nvidia, that's more reason for me to personally want to buy some more. Not financial advice, let me throw that out there, but personally, I'm very much interested in continuing to add to Nvidia.
I've been finding it. I don't know the ins and outs of actually barely any details about it. I'm only hearing about Nvidia through the grapevine. I did hear that they focus on GPUs, which and they're one of the few players in the space, which is why those things are squeezing up. But that other chips like LPUs that are specifically designed for AI and that are far more powerful are going to come out, and that Nvidia is not prepared in order to make those. I don't know what if that's true or not. But what I do find interesting is that currently, the current state that we have is that an AI language model can run Doom without a game engine. This I find to be absolutely fantastic, amazing that you could run Doom just using LLMs because it's predicting every frame the same way that it predicts the token in ChatGPT. So every movement you're seeing, every movement you're seeing here is an image being generated, just like in Midjourney or Dolly or whatever. That's what's happening.
Wow, that
Yeah.
is crazy.
Yeah, I think this is 12 frames per second, but it's bananas.
That is bananas. Okay, so I mean, we need to think about this for a second. What you're basically saying is that so did it just create like a video sequence, or is it is it based on real user input?
Based on real user input, and as they're moving, it then generates. Okay, if they put the right arrow, that means I have to generate an image that's slightly, and then load that, serve that image to the user.
That's a mind blow. Okay.
Isn't it?
Because it's reflecting an entirely different version of the game. Like, it's important to understand that what we're looking at isn't really the game itself, right? Which has sort of the same physics boundaries or, rules about the wall being there, things like that. Like, there's a whole lot more going on behind the scenes of a game engine than what is being rendered by AI there. What is being rendered by AI is a prediction of what the frame should look like based on user input and its understanding of the way that the game looks visually, and it's re-rendering those frames 20 at a time. I think Peter said it's 20 frames per second.
Oh yeah, it could be higher than 20 frames per second.
Yeah, so we're kind of like, what we're seeing is kind of an illusion, but an amazing concept to think about, that AI could be used to sort of re-represent those types of virtual environments as well.
That's right. And so when people are saying that we're at the very beginning of what this AI could be, like the very beginning of this bubble,
Right.
the development process, we don't even know how we could put these things together.
Hmm.
And I'll always use the example of that JavaScript was around for way longer than people think before it started becoming like seriously used. I mean, now it's like, half of everything is built on apps are built on JavaScript, and it was just like especially asynchronous JavaScript was just sitting on the protocol was sitting on the browser and no one was using it. And it's just when they figured out how to put them together, we're like, hey, we can make dynamic things on a website. We can send information back and forth. We could upload files, all the different things that came up from that without having to reinvent the technology. So who
Right.
knows what these AI systems can develop.
I totally agree. And, I know we've spoken about the Gartner hype cycle in the past. We're still in the innovation phase here. This isn't even close to the peak of inflated expectations.
Right.
It'll be a while before we get to a point where we're like, all right, this is everything AI can do. Because every week I'm seeing new things that are blowing my mind. And back to my point earlier, even the introduction of open source models like Facebook's Llama model, where we can now run these types of language models locally on our machines, have access to something that's open source that doesn't even cost anything. You still need a graphics card for that. You still need some power to run that thing. Who benefits from that, Tom?
Nvidia. Exactly. Yeah. So I am, and so we have the structural flows that are there, right? And those things change very slowly because these passive flows are dependent on largely on, from what I understand, unemployment rates or the employment landscape. And so as long as people are paying into those plans, they're not thinking I'm going to buy Nvidia. They're just allocating the funds that then get purchased at the end of the week. Some of them are matched by their employers, and as long as that stays pretty stable, then we're good. Even if we get up to well, I guess it depends. The number of unemployment that we have to reach to, where now we get a significant reduction of those flows, or worse, where people have to sell those assets in order to survive, then we get the opposite will occur. Where the forced selling, even if the company is good, but we should be able to see that coming a mile away. That'll be telegraphed from months ahead of time, maybe even a couple of years ahead of time. So until then, you get the structural flows, and then you have the beginning of the AI cycle. I mean, we'll have to redo TradingView charts because it's just going to be lines up for some of these companies. Man, it's just crazy. Like when oil went negative, you can't like have your chart go all the way back in oil because your charts get all screwed, or you have to look at it on logarithmic scale.
I think that it's funny you say that. That's when logarithmic charts will become more popular. Suddenly people realize, oh, that's what it's used for. It's when things go parabolic.
That's right. All right. So I think it's important. So I don't have anything else to touch on. There were some small things that happened, like I know for my sake, Cardano is they're just on the verge of basically completing the token, and so it should end up being basically governance of the token will be given to the community, and that unlocks something like hundreds of millions to $1 billion worth of development funds that can be voted on and available to the public. I'm very interested in that. I think that's pretty cool. Maybe could reach out to Charles Hoskinson, the creator of Cardano. I'm sure he has time between Buffalo ranches in order to come give a talk to us. But then there's the RFK endorsement of Donald Trump, right? The two people who got the cheers at the recent Bitcoin convention, now joining forces. I mean, that's pretty bullish for crypto. I think that's pretty interesting. I mean, not that I think they could ever win, but let's say they did win. That's pretty bullish. And we're seeing also the Democrats start to pick up some of the pro crypto slant, right? So that might be interesting. So that those are that's more structural changes, fiscal changes from the government that could go into financial markets and then crypto as well. Yep. But then we have the issue of the potential taxing of unrealized gains for Americans. I don't know how that's going to hit you guys, but that's not going to be good for the stock market. So we'll have to see.
Yeah, that seems unlikely to change. I see no reason why that's going to get a lot of support. There's so much that goes into our ability to avoid taxation through unrealized gains, and
Right.
it would be very surprising to see something like that change.
And I can't imagine multimillionaires and billionaires going, well, I guess I just got to pay 25% on my unrealized gains. Oh, shucks, they've gotten me.
Yep.
So I'm not worried about that. Okay, perfect. So, I mean, if it's not clear for me at this point, I'm so super bullish the monetary policy for the United States. And if this one, it's so interesting to be on this side of the border in Canada and being able to invest in American things without having to touch any of the cultural
You're over
landmines that are
here
there.
eating popcorn, aren't you?
That's right. And I can imagine that's how a lot of foreigners feel. They're like, okay, let that thing, whatever's happening, happen. But if you're going to invest any money, you got to be exposed to the American market. All right. Perfect. So that's it for here, unless there's anything you wanted to touch on, Mike?
No, I mean, I was excited to kind of cover these Nvidia results and obviously the state of the crypto environment. If again, the downturn here feels a lot like accumulation, so I'm kind of excited about that. If that's a good opportunity to start loading up on crypto, then fantastic. But like I said, we need that catalyst to move upwards. So I'll be excited to see what that actually is. I feel like there's a lot of good cases for what that's likely going to be. Presidential election, inflation changes, dollar changes. I think all of those are good logical reasons, but we need something. Let's see what pushes it higher.
Excellent. Never a dull moment in markets. All right. So we'll leave it there and have a great weekend, folks.
Have a great weekend.